In this video, I'll analyze the Q2 FY26 result and concall of three affordable housing finance companies, which are India Shelter Finance, Home First Finance, and Aptus Value Housing Finance. Okay, so let's start with the sectoral overview. So these three companies mainly provide affordable housing finance loan and loan against property with an average ticket size of 10 lakh rupees. Okay, and if I talk about their geography, they are mainly present in the tier 2, tier 3, tier 4 cities of India. Okay, so that is the geography, and they mainly cater to the lower income group and middle income group people. So that is the point. And in terms of the size of the loan book, uh, Home First Finance is the number one with 14,000 crores of AUM. Then Aptus Value Housing Finance with a AUM of 12,000 crore, and the smallest is the India Shelter Finance with a AUM of 9,000 crore. So in this video, we have to find out the best affordable housing finance company. Okay, and if you ask me how, then for financials, first we have to look at their asset quality. Okay, that if the asset quality is deteriorating for any companies, any NBFC, then the first thing we have to do is remove the company from our list. Then if the asset quality is improving or asset quality is stable, then we have to look at the growth in terms of the AUM. Okay, so that is the second point, that we have to find out the company with the highest loan book growth. So that is the second point. And after that, there are multiple things. These are the main: asset quality and the growth. These are the main thing in a company. If I am doing fundamental research, if I am doing equity research, these are the main. After that, there are multiple levers like spread, NIMs. If a company's spread and NIMs are getting better, then obviously they will get more profitability. Okay, then another point is the cost of operation, cost to income, OPEX to AUM. If these parameters are getting better, then obviously they are getting an operating leverage, which is a very important thing. So if a company is getting these two things, I mean, if their NIMs are getting better, spread is getting better, then if their OPEX to AUM is getting better, then obviously, let's say if a company is growing at a rate of 30% in terms of the AUM, then obviously if these things happens, then their profitability PAT is going to grow at a higher pace, like 35-40%. Okay, so that is why these things are also very important when we are doing equity research. So main thing is the asset quality, then AUM growth, because if the asset quality is deteriorating, obviously going forward the AUM growth is going to come down. But if the asset quality is stable or improving, then the AUM is going to grow at a higher pace, if the management is willing to do it. Okay, then after AUM growth, we have to look at their other levers like cost to income, OPEX to AUM, then NIMs. Okay, so these are the points we have to look at. So let's discuss the result and concall of these three companies, which are India Shelter, then Home First, and Aptus Value. Okay, so if I look at India Shelter's AUM in this quarter grew at a rate of 30%. And if we look at their AUM growth in the last few quarters, okay, they have been growing at a rate of 32-34% over last few quarters, which is very good and which is industry leading. Okay, so that is the point we have to look at, that they are growing at a very good pace. And if we look at their guidance also, they are guiding us for a 30 to 35% kind of a AUM growth over next 4 to 5 years. And if I look at their FY30 target, then they are talking about 30,000 crore of AUM by FY30, and currently they are at around 9,000 crore AUM. So uh, the guidance is to grow at a rate of 30 to 35% over next 4 5 years. So that is the guidance the management is providing us. Okay, so in terms of the disbursement also, if we look at their disbursement in this quarter, the disbursement was little low, mainly because of the environment we are in. Each and every management is talking about some kind of pressure in terms of the asset quality in some region. Okay, so that is why the disbursement was little low in this quarter. Like if we look at their disbursement, in this quarter the disbursement was 931 crore. And if we look at their past few quarters, uh, in, over last few quarters, they grow their disbursement, they grew their disbursement at a rate of 24-25%. Okay, but in this quarter the disbursement only grew by 12%. So there was a shortfall of 100 crores of disbursement, mainly because of the environment we are in. Each and every management has been talking about some kind of pressure from the last quarter, and in this quarter also, all the management is little cautious. So we also have to be cautious. So that is the thing, and we have to be watchful also in the next quarter, next few quarters. So that is the point I am talking about. So if I look at their AUM growth, or if I look at their guidance, then they are guiding us for a 30 to 35% of growth. And to grow at a 35 to 35%, 30 to 35%, they have to grow their disbursement at a rate of 22 to 25%. Okay, so currently in this quarter the disbursement growth was 12%. So obviously the management also talking about the disbursement. They said that in the coming quarters, as the environment will get better, they will again come back to the past level of 25-30% of disbursement growth. So that is the point management is saying. So that is the point with the loan book. In terms of the asset quality, if we look at their 30 plus DPD, 30 plus DPD, if we look at their 30 plus DPD last year, till the Q4 FY25, the 30 plus DPD was around 3.5% level. But from Q1 FY26, the 30 plus DPD shoot up to 4.5%. Okay, and in this quarter the 30 plus DPD was at 4.7%. so that is a negative point, because if the 30 plus DPD is increasing, then obviously it is a bad sign. Okay, so that is one point. But if we look at the GNPA number has been stable over last few quarters. So there is a mismatch. If we look at the 30 plus DPD number and GNPA number, there is a mismatch. But why? The management is saying that if a customer, let's say if a customer has missed one or two EMIs, but he will think hundreds of times before missing the third one, because he knows one thing, that if he misses the third EMI also, then the company is going to liquidate their asset. So no one wants to lose their house. So that is why if one customer misses, let's say, one or two EMI, generally they pay the third one to retain their house. So that is why the 30 plus DPD has been increasing, okay, over last 2 quarters. But if we look at the GNPA, that has been very stable over last 1 year, one and a half year. So that is the thing the management is saying. But yeah, we have to be watchful, we have to be cautious. In the next quarter we have to look at it very closely, that where the 30 plus DPD is going, where GNPA numbers are going. If I talk about the guidance, if I talk about the commentary of the management also, last quarter the management said that they will, if the Q2, if the Q2 is going to be at a similar level, okay, then they will improve, the 30 plus DPD towards like 3.5 to 4%. That was the commentary last quarter. But in this quarter, what the management is saying, that they will stick to that number. I mean, they are confident of 4 to 4.5% of 30 plus DPD. So that is the change in the commentary. That last quarter they were saying that 3.5 to 4% kind of a 30 plus DPD. Now they are saying 4 to 4.5% of 30 plus DPD. So that is the change in the commentary. And I am not saying that it is the end, okay, from here everything is going to be finished in India shelter. No, absolutely no. But we have to be watchful, we have to be cautious. So that is the point I am trying to talk about. So that is the 30 plus DPD. Next quarter, the first thing we have to look at, if the 30 plus DPD is improving or not. If they are able to restrict the conversion of 30 plus DPD to GNPA number, that is one another very big thing, because till now they restricted the conversion of 30 plus DPD to GNPA. So we have to look at it also in the next quarter. So that is the point with the 30 plus DPD. Then if I talk about the credit cost also, over last few quarters it has been very stable, and the management is also guiding us for a similar kind of credit cost, okay, of 40 to 50 bps. Now it is at I think it is at 50 bps, and the management is guiding us for a 40 to 50 bps of credit cost in the medium term. It means that in one and a half year they are confident of 40 to 50 bps of credit cost. So that is the commentary in terms of the credit cost. Then if I look, so in terms of the asset quality, if I summarize the asset quality, it has been stable over last few quarters. Only negative point is the 30 plus DPD, which the management is little confident, very much confident to contain these 30 plus DPD to this level of 4.5%. So let's see what happens in the next quarter. So asset quality, it is more or less stable, okay. So in terms of the spread, if we look at their spread, it has been improving over last few quarters. If I look at their Q1 FY25, the spread was at 6.1 level, okay, and it has improved to 6.4% in this quarter. So the spread has been improving over last few quarters. That is a very good thing. And the management, uh, in terms of the cost of borrowings also, the management is saying about they are expecting another 20 bps of reduction in terms of the cost of borrowing. So we can expect further 10-15 bps of improvement in terms of the spread. So that is what we can expect in terms of the spread. In terms of the cost, in terms of the opex to aum also has been improving over last 1.5 year. If we look at Q1 FY25, OPEX to AUM was at 4.4%, and now in this quarter, OPEX to AUM came down towards 4.1%, and the management also talking about improvement in the OPEX to AUM going forward. So that is the guidance they are giving to us. And as the opex to aum is coming down, they are getting operating leverage. So obviously their profitability should grow at a higher pace. And if we look at their branch expansion also, in the H1 FY26 they opened 33 branches, and the target is to open 40 to 45 branches in a year for next 2-3 years. So that is the target they are getting. So if we look at the branch opening, then they are more or less done with the branch opening. Another 7 to 12 branches they are done for the year. So that is a good thing. They are going in a right direction in terms of the branch expansion, because it is also a very important number that you have to grow your branch network to grow at a higher pace of 30-35%. So that is the point. In terms of the PAT, in this quarter their PAT grew at a rate of 35%, which is a very good kind of number. And if we look at their past few quarters also, they have been getting constant operating leverage over last 1.5 year, 2 year. Okay, so operating leverage, they are getting a very good kind of a operating leverage in terms of the profitability. Okay, so that is one really good thing. And then again, if we look at the ROE number, it was at around 14.3% in Q1 FY25. Now it is at around 17%. Okay, so ROE number also, it has been improving quarter on quarter. Okay, that is a very good thing. And ROE number, we all know that how important ROE numbers are. ROE number is okay. So they have been improving their ROE number very well. So that is a very good thing. If I talk about their ROE guidance also, they are targeting a 18% of ROE for FY28. Okay, which is like they should get it easily before FY28, because now they are at 17% ROE. So obviously they should get their get at a rate of 18% very easily by this year also. Okay, so that is the point of ROE. And see one thing, they are getting operating leverage, their spread has been improving, their OPEX to AUM has been improving. So obviously their ROE is going to grow, their ROE is going to improve. So obviously that is the obvious thing. So that is the point. So overall, very good set of numbers. If we look at their result, if I have to say anything, only 30 plus DPD was paid. We have to keep our eyes on it in the next quarter. But except that, all the things were very good in terms of the growth, in terms of the operating leverage, all were there. And another quarter, a very good result from India Shelter. So that is the point. So let's move on to the next company, Home First Finance. Okay. So if I talk about Home First Finance, if I talk about their AUM growth, in this quarter their AUM grew at a rate of 26%. Okay. So if we look at their growth trajectory till Q4 FY25, they were growing at a rate of 30%, over 30% every quarter. But after Q4, from Q1 FY26, their growth rate came down under 30%. So that is a negative thing. Obviously, if a company's growth rate is falling, that is not a good thing. Obviously, with size, the growth rate is going to grow at a lesser pace, but the change here is very huge. If we look at their AUM growth in till Q4, they were growing their AUM at a rate of 32%, 33%. But in this quarter, I mean in Q1, their growth rate came down to 28%. Then again in this quarter, growth rate come down further towards 26%. So that is a negative thing, obviously, no doubt about that. In terms of the disbursement also, their disbursement grew at a rate of 9% in this quarter. Obviously, if we look at other financiers also, all are very cautious, and this is the main reason behind the lower growth rate. So that is the point. If we look at their disbursement few quarters back, they were growing at a rate of 22%, which is enough to fuel your AUM growth at a rate of 30%. Okay, but in this quarter, obviously the environment is not very good. All the financiers are talking about this, and so that is the point with the disbursement. Let's see what happens with the growth rate. If I talk about their AUM guidance, then the management is guiding us for a AUM growth of 25% going forward. Like they are giving a guidance of 20,000 crore 20,000 crores of AUM in the next 2 years. Okay, which is a growth rate of 25%, and the management is also talking about a growth rate of 25% going forward. Okay, so that is the guidance they are giving. In terms of the asset quality, if we look at their 30 plus DPD has been increasing over last few quarters. If we look at before Q4, the 30 plus DPD was at around 2.8 to 3%, but from Q1 FY26, the 30 plus DPD increased towards like 3.5, 3.7 level. Okay, so that is another company which is reporting a higher 30 plus DPD, like India Shelter also reported a higher 30 plus DPD. The 30 plus DPD for Home First Finance was affected mainly due to two reasons. One is Surat, the diamond city. Lots of diamonds are exported from Surat to USA, and because of those tariff issues, there has been a disruption in the export. So that is why Surat was one place, one reason where their asset quality deteriorated. Another one is Tirupur, which is, if we look at Tirupur, the main economy is supported by the textile industry. Okay, and we know that how much textile is exported from India to USA, and because of this tariff issue, those export orders, those export got affected. So that is why in this two region the home first finance is facing a issue in the asset quality. So that is why the disbursement was low, and one another point is 30 plus DPD and asset quality uh, got deteriorated in this quarter. Okay, in terms of the GNPA, again, um, as India Shelter, GNPA is stable, more or less stable over last few quarters. So no issue in the GNPA number, but 30 plus DPD has been increasing over last two quarters. So that is a negative point, but again GNPA is more or less stable. Okay, in terms of the guidance, the management is guiding us for a 3 to 3.5% of 30 plus DPD going forward in the longer run. Now it is at 3.7%, and the management is guiding for 3 to 3.5% of 30 plus DPD. So that is the point management is guiding us. And in terms of the asset quality, um, asset quality, if we look at their asset quality, obviously asset quality has been deteriorating since the last quarter, but the management is more or less confident about holding to this level. So let's see what happens in the next quarter. We have to be again watchful, very watchful, that what is going on in the asset quality. Okay, so that is the point with the asset quality. So let's talk about the spread in this quarter. If we look at their spread improved quarter on quarter by 30 bps. Okay, so that is a very good kind of a improvement in terms of the spread, and the management is also confident about more expansion in spread. Like they are they are guiding us for a 5.2% of spread going forward. And why I am saying that the management is confident about the spread expansion is they are saying that their cost of borrowings is going to come down further by March, if March 26. So that is why we can expect expansion in spread going forward later in the financial year. So that is the point with the spread. In terms of the OPEX to AUM, OPEX to AUM has been stable over last few quarters. So no issue with the OPEX to AUM. And if I talk about their guidance, they are guiding us for a similar kind of range going forward in the next 1.5 year. So that is the point. But in a longer term basis, they are expecting further improvement in terms of the OPEX to asset. Okay, so that is the point. So in the medium term, they are expecting similar kind of level, but in the longer term means 3-4 years, they are expecting further improvement in the OPEX to asset. In terms of the branch expansion, they will open another 4 to 5 branches in the next quarter. So in terms of the branch expansion, they are doing well. I will not say they are doing very good, but they are doing okay kind of. Okay, so so that is the branch expansion we can expect. In terms of the PAT, in this quarter, PAT grew at a very high pace of 43%. So that is a very good thing, mainly driven by, I think, the PCR number. If we look at their PCR stage 3, it was 22% last quarter, and it is at 21% in this quarter, mainly driven by the PCR. Because if we look at, and one another point is the spread, obviously their spread got better but OPEX to asset, there was no operating leverage. But yeah, obviously their PAT grew at a higher pace than their AUM, so obviously they got the operating leverage. So that is the point with Home First Finance. Uh, and one another thing is ROE. If we look at ROE, in this quarter ROE was lower, mainly because of the fundraising, but they are targeting a ROE of 15% going forward. But still, I think 15% is still a low ROE. Their ROE is at around 13.4%, and they are expecting 15% ROE by FY27, which is like another 2 years. Uh, Sorry, another 1 year. We have another 1 year, so within 1 year, they are expecting another 1.5% of improvement in terms of the ROE. So in terms of ROE, they are like they are little low in terms of the ROE, because if we look at India Shelter, if we look at Aptus value, they are generating very high ROE out of their business. But Home First Finance is little like little low in this parameter. So that is the point with Home First Finance. So overall, a fair set of numbers if we compare it to India Shelter. If India Shelter is 8 out of 10, Home First Finance is around let's say 5 out of 10. So that is the number I would like to give, because if we look at their growth is coming down quarter on quarter. If we look at their asset quality is also not holding up. If we look at India Shelter's AUM growth is also in a similar kind of level. Asset quality, except 30 plus DPD, it is hovering around that level. So that is why I am saying that. And in India Shelter, they are getting a operating leverage. OPEX to AUM is improving, has been improving over last few quarters. But with Home First Finance, that is not the case. So that is why I would like to say that it is at around 5 out of 10. Whereas if I talk about India Shelter, I would say 8 out of 10. Okay. So let's move on to the last company, Aptus Value Housing Finance. So in this quarter, Aptus Value Housing Finance grew their AUM at a rate of 22%. Okay, and if we look at their growth rate, they have been growing at a rate of 25% over last few quarters. The guidance always was around to grow at a rate of the guidance always was to grow at a rate of 30%, but they are consistently missing their guidance. Okay, so that is one bad thing about Aptus value. And now they are guiding us for a 25% of growth in FY26. But if we look at their H1, they grew at a rate of 23%. Okay, so that is the point with Aptus value. I mean their growth. In terms of the disbursement also was little low year on year, but quarter on quarter they improved very well. Their disbursement grew by 25% quarter on quarter, which is very good. Um if I look at their AUM guidance, they are guiding us for a 25% AUM growth going forward over next 2 to 3 years. Okay, so that is the kind of guidance they are giving. Their target is to grow their AUM towards 25,000 crore by FY29, whereas currently they are at around 12,000 crores of AUM. Okay, so that is the guidance they are giving. In terms of the disbursement, they are guiding us for a kind of 15 to 16% of growth. Okay, and and the management is saying that whatever disbursement happened in Q2, the October was relatively better than Q2. So that is a good thing that the management is guiding us. I mean, management is talking about better future. I mean, the October, I mean Q3 FY26, they are confident about a better disbursement in Q3. Okay, so that is the point with the disbursement. If I look at their 30 plus DPD, if I look at their asset quality, unlike India Shelter and Home First Finance, their 30 plus DPD improved quarter on quarter. So that is a good thing, and it is around the level of where they were in the last year. So that is a good thing about Aptus value, that their 30 plus DPD has been in a kind of a same level if I compare it to last year. So that is the point with the 30 plus DPD. But when we look at their GNPA number has been deteriorating over last few quarters, because if we look at the last year the GNPA number was at around 1.25 to 1.3%. Okay, but in Q1 they reported a GNPA of 1.5%, and again in this quarter they reported a GNPA of 1.55%, which is obviously not good. Uh, GNPA number is also very different. The GNPA trend is also very different if we compare it to India Shelter and Home First. India Shelter and Home First, the GNPA of India Shelter and Home First was very stable quarter on quarter, year on year, whereas their 30 plus DPD was increasing, but it is completely different with Aptus value. Their 30 plus DPD is stable and GNP number is not stable. Okay, so that is the difference in the Aptus value and those two companies. But if we look at the collection efficiency improved quarter on quarter, so that is a good thing. So overall asset quality has been a mixed bag, I would say. Obviously if we look at India Shelter and Home First, uh, kind of a similar kind of a trend we are seeing in these three companies. Okay, so that is the point with the asset quality. And if we look at their spread has been improving uh, over last few quarters. If we look at quarter on quarter number also improved by 20 bps. Their year on year number also improved by 20 bps, mainly because the management also said in previous concalls that as the interest rate comes down, their cost of borrowing is going to come down, but they will not pass on the benefit to the customer. So their portfolio yield has been kind of a similar range of 17.3%, but they are getting a benefit in their cost of borrowing. So that is why the spread has been improving over last few quarters, and the management, we can expect another few 10-20 bps of spread improvement going forward, obviously. So that is the point with the spread. So they are getting a better spread in terms of the operating leverage, in terms of the OPEX to AUM. If we look at the OPEX to AUM, that is kind of a stable in a range of 2.6 to 2.7%. And the management is also saying that we are not looking to lower their OPEX to AUM, because they are focusing on the growth. So that is why we can expect similar kind of OPEX to asset going forward also. So that is the point they are talking about. In terms of the branch expansion also, in the each one they added around 21 branches. Okay, so 21 branches, and their guidance was to add 40 branches in FY26. So they are 50-50, opened 21 branch and 19 more branch to go in this FY. So that is the point with the branch addition. They are looking to grow, and that is why they are guiding us for a similar kind of OPEX to AUM going forward. So that is not a bad thing, obviously. If a company can grow, if a company is looking to grow at a higher pace, then obviously no harm is there if there is a pressure in the OPEX. Okay, so that is the point. In terms of the PAT, they grew their PAT by 25% in this quarter. So they are getting a very little operating leverage because their AUM grew at a rate of 22%, and their PAT grew at a rate of 25%. So very minimal kind of operating leverage they are getting. So that is the thing in terms of the PAT. In terms of the ROE, they are doing really well in terms of the ROE, because if we look at their ROE, they improved their ROE year on year by 170 bps, which is a very very good thing. And if we look at their ROE number also, they are generating a ROE of 20%, which is a very very good thing and industry leading ROE. Because if we look at India Shelter, they are generating a ROE of 20%. Home First Finance is confident about generating, India Shelter is generating a ROE of 17%. Home First Finance is confident of generating ROE of 15%. But Aptus value is generating a ROE of 20%. So if I look at their loan book and the kind of growth they are expecting, 25% of growth going forward, and they are generating a 20% of ROE, and the management is also confident of getting better ROE going forward. That is one another very important thing. They are looking to improve their ROE towards 22% going forward. Okay, so that is the kind of target they are giving. So that is a very good thing. And if I look at their growth, they are looking to grow at 25%, and they are targeting a 22% of ROE. So obviously they would need very little kind of external money, I mean the equity raise. They have to do lesser equity raise to grow at a 25% for a long year. They can grow at a rate of 25% without getting a external fund. Okay, so that is a good point, that is a very good point. And their leverage is also very comfortable position. They are in a very comfortable position in terms of the leverage also. They are at around 2.5x leverage, and they were talking about 4x to 5x kind of leverage. So they can grow easily for next 5-6 years with internal accrual. So that is the point with the internal accrual plus debt without raising any QIP. So that is the point with the leverage and ROE. So in terms of the result was good enough, I mean fair enough result, I would say. I would like to see their AUM to grow around 25, at around 25-27%, because it has been very long that the management is guiding us for a 30% growth rate, but they are doing 27, 28, 25%. So they are missing their guidance very consistently. So I would like to see the management uh, fulfilling the guidance. So that is the point with the Aptus solo. Overall, a fair set of numbers, I would say 5 out of 10 for Aptus value. So that is the point. Okay, so if I look at these three companies, which one is the best? Obviously, if we look at India Shelter, they are growing at a much higher pace. Also, if we look at the asset quality, the asset quality has been pretty stable. Uh, other three companies are also doing. Other two companies are also doing very good in terms of the asset quality. In terms of the operating leverage, who is getting better operating leverage? Obviously, India Shelter, the OPEX to AUM has been improving. Whereas if we look at Home First and Aptus value, their OPEX to AUM has been very stable at a range. Okay, but India Shelter has been improving their OPEX to AUM. In terms of the spread also, uh, three companies are doing very good, very well. In terms of the branch expansion, India Shelter is more aggressive towards their expansion. Obviously, Aptus value is also there, but Home First is little behind in that perspective, in that parameter. So that is the point. So if I look at these three companies, obviously India Shelters comes out to be the best for this quarter. Let's see what happens in the next quarter. We have to track all of these three companies, because we never know that what which company is going to do what in the next quarter, in the next year. So keep tracking, keep analyzing the companies. So that is the point with these three companies. So that's it for the video. Thanks for watching.